Bismillahirrahmanirrahim. In this video, I'm going to solve the problem 5-1 from the book Vagant Financial and Managerial Accounting. So we will do problem 5-1A here in this video. That is about regarding the buying and selling of the merchandising using the perpetual inventory system. So in this video, I'm going to solve this problem. So we are given the information relating to the company Ready Set Go company that distributed suitcases and to retailer stores and extends credit terms of 1, 10, and 30. So credit terms means in order to facilitate and in order to encourage our customer to pay their account receivable as early as possible, we extend the merchandisers sometimes give some such type of credit terms. 1, 10, net 30 means that 1% discount will be given if they will pay within 10 days, and otherwise they will have to make full payment within 30 days. So such type of credit terms are given to our customers in order to encourage them to make the payments as early as possible. And so here the company is giving 1, 10, and 30 credit terms to all of its customers. So at the end of June, company's inventory consisted of suitcases costing of 1,200. And during the month of July, the following merchandising transactions were occurred. So this is the list of the transactions, and this is the chart of accounts and instructions. We are asked to record the transactions for the month using the perpetual inventory system. So I will do this problem on the Excel and record the transactions in the journal. So the first transaction is, first of all, I will record inventory account comprised of 1,200 of beginning balance. So this is the journal, and all these are the T accounts. Although we were not asked to make these T accounts, but for your understanding, I just make that just to show you that how this accounting process continued in case of merchandising businesses. So this is the inventory account, and this is placed among the asset account, as inventory is our asset that is for the purpose of sale. So this is placed among the assets and among the current assets. This is our current assets, not the fixed asset. Then these are the liabilities account, and these are the sales relating accounts, and then the cost of goods sold, as cost of goods sold is like expenses have the debit balance. So these are the T accounts, and now we have the make entries in the journal, and we will post them to the ledgers as we are doing in our normal course of business. So the first transaction is that purchase suitcases on account 1,500 from trunk manufacturers at a terms of 210 net 30. The appropriate party will make the payment for the freight on this date. So FOB destination. This is what does it mean? FOB means FOB means freight on board. And what does it mean? Freight on board is a terminology that is used to make it clear that who will pay the freight charges or the transportation charges. If the terminology is FOB shipping point, it means that the buyer will pay the freight cost, and if the terminology is FOB destination, then the seller will pay the freight charges or the freight or the transportation cost. This payment is about ownership of the asset. As here, FOB shipping point, at the shipping point, the ownership is transferred to the buyer. So the buyer will make the payment, the owner will make the payment. Whereas in case of destination, the ownership is passes to the buyer at their destination, and in between the ownership remains with the seller. So the seller is going to make the payment. So in our given problem, we are told that FOB destination. So FOB destination means that seller will make the payment. So if the seller is going to make the payment, we don't need to record this cost. Okay, so we will just record the buying of inventory, and that's all. So let's do the transaction on the journal. So our debit credit rules will be the same as inventory. Inventory is going to increase. We are going to buy our assets. So inventory account will be debited by an amount of 1500. And as we are going to make payments later on in the future, so account payable will be increased, and that is recorded on the credit side. And in explanation, we will write that from manufacturer purchased from trunk manufacturer, FOB destination, and the terms 210, comma, net 30. Right, so this is our transaction is completed now. And so we will post it. Inventory account 1st July 1500. Account payable 1st July 15. So we have completed our transaction posting as well. So the next transaction is going to happen on the 3rd of July. That is sold of merchandises, the suitcases to the Satchel World. Our terms will be the same 110 and 30. And this is the sale price, whereas the cost of suitcase sold is 1400. As I told you that in case of perpetual inventory system, we will have to determine the cost every time the sales occurs. So at the time of making sale, we will do two types of transactions. One transaction will be to record the sales price, and the other transaction will be to record the cost price. So selling of is at the 2200 and cost is 1400. So simultaneously we can determine the net profit. Not net profit, the profit, that what is the what amount of profit we are getting from this sales transaction. So let's do it. So sales revenue increases, so account receivable 2200, and sales revenue, like revenue is always credited, so sales revenue will be credited. Sold to Satchel World on terms on terms 110, comma, net 30. And the second transaction will be to record the cost of goods sold. That was 1400. As our inventory is going down, we are selling our inventory. Inventory is going out of the stock. So inventory is decreasing. So decrease in inventory is recorded on the credit side. To record cost of goods sold. So now we will post it. Account receivable on 3rd of July 2200. And sales revenue is 2200, and cost of goods sold 1400. and inventory is going to decrease. So 1400 is recorded on the credit side. So this transaction is also completed and posted. So the next transaction is about paid to the trunk manufacturers in full. Uh, as we purchase from the trunk manufacturers on 1st of July, and we have to make within 10 days and we are within the discount period. So we have availed the discount of 2% on 1500. So if the 1500 was the purchase price, and this price we will get 2% discount if we will make the payment within the discount period. So we are going to make payment, cash is credited, but now we will pay less CAT as compared to account payable, and the difference will be the purchase discount. But in case of perpetual inventory system, this purchase discount is going to decrease the value of the inventory. So inventory account will be uh, credited instead of the purchase discount direct. So let's see how we will do that. So account payable was an amount of 1500, and we are going to make a cash. How we will record it? That we have to make payment 1500, but we are availing 2% discount. So that we will pay 1470, and the difference is our decrease in our inventory account. So this $30 will be the decrease in the inventory account due to purchase discount. But for perpetual inventory system, we will not make any purchase discount account. We will directly credit it to the inventory account. So now see how we will do the uh, posting. So this is account payable. 1500 has been decreased, and cash of an amount of 1470, and the 9th of July of an amount of 30. So inventories value of an amount of $30 has been decreased. That's why we have credited that. So this is how we have posted this account. So make payment to trunk manufacturer within discount period. So we have availed the discount. So and let's do the another one. The next transaction is received payment in full from the Satchel World. So we have sold to Satchel on 3rd, and we have given them the discount of 10 days at 1% discount for 10 days, and they are making payment within discount period. So we will have to give them the discount, and this is called as the sales discount. So we were supposed to get 2200, but instead of 2200, we will get less cash because of the sales discount. So see how we will record this on the journal and post them. As we are receiving cash, and whereas our account receivable, was an amount of 2200 is reducing, but we are getting 1% less. And the difference is the sales discount. So sales discount is an opposite of the sales revenue, and this is going to decrease our revenue. That's why decrease in revenue is recorded on the debit side. So sales discount is always will be recorded on the debit side. This can be called as the contra sales account. So its value will be equal to 2200 multiplied with 0.01. So by 2200 is the amount, and so we have availed a discount of just confirm it that the correct entry. So 22 is sales discount. So now we post it. And account receivable of 2200 is reduced, and 22 will be recorded on the sales discount as on the debit side. So received payment from Satchel work within discount period. So this next is sold suitcases on account to Lady Gogo. So we are making sales, and we are given two type of information. One is for the sales sales revenue account, and the other one is the cost of goods sold. So 1400 and 1000. Yeah. So again, we will make the same type of entry to record the goods of record the sales revenue and to record the cost of goods sold. So at this time, we are going to sold to Lady Gogo. Terms will be the same. So the amount of sale was 1400. Where was the cost was 1010. Now let's post it. Account receivable. Account receivable is 1400. Sales revenue is 1400. Cost of goods sold is 1010. And inventory 1010. So we have postage. So let's do another transaction. Purchase suitcases on account for 1900 from Holiday Manufacturer, and FOB is the shipping point. So again, at this time, the buyer is going to make the payment. So we will have to record this transaction, as this freight charges will directly be added to the inventory account. So inventory account will be debited for an amount of 125. So let's do it on the journal. inventory. The value of inventory that we purchased is 1900, and account payable is 1900, purchased from manufacturers. Holiday manufacturer terms are 210, comma, net 30. So let's do the posting. Inventory 1400, account payable 1400, and now so we will record the freight charges, as these freight charges is directly increasing the cost of the inventory. So the inventory will be added. The freight charges were an amount of 125. This 1900, not the 1400. 125 are the freight charges. So inventory account will be added by 125, and cash 125. Paid storage 125 and 125. Okay, we are done with the posting as well. Now we will do the another transaction that is happening on 20th. Received 300 credit including freight for suitcases returned to the holiday manufacturers. So as we have purchased from the holiday manufacturer, and some goods were not according to our choice or according to the our quality required. So we returned them, and in return we got the credit of 300. So inventory account will be credited and account payable will be debited by an amount of 1300. This is how we will record the purchase returns. So account payable, so now we have to pay less. So account payable has been debited, and inventory has been reduced. So 300 to record a purchase returns. So let's do the posting. Debit is account payable 300, and credit is the inventory amount is 3. Okay, the next transaction is on 21. Received payment in full from Lady Gogo. See, we sold to Lady Gogo on 17, and they are going to make payment within the discount period. So we will give them 1% discount. So let's see how we will record this on the journal and post that. As this is the same like we have done previously, as we are getting cash, but the cash received will be less than the account payable, and so the account receivable. So the account receivable from the Lady Gogo was 1400. So account receivable was 1400 to be received, but now we will give them discount of 1% sales discount. So this is called sales discount, and this amount we will get less. So 1400 minus 14, so we'll get 1356. So received payment from Lady Gogo. So cash is 1386, whereas account receivable was 1400, and 1400 was recorded as sales. 14 was the sales discount. So now we will do the next entry. Next entry is that we are going to sold on account to Vagabond, and the cost of sale is 1350. So again, we will do the two types of transaction. One to record the sales revenue, and the other one is to record the cost of goods sold. So just going to copy and paste the just mention Vagabond. Terms will be the same, and we sold at 2250. Whereas the cost of sold was 1350. Just post it. Do the next entry, paid to holiday manufacturer in full. We purchased from the holidays in on 18th from the holiday, and now we are going to make payments on 30th. It means that we have not availed the discount. So this is not within 10 days, 18, and not on 28. If it will be less than 28, then it will be, we will avail the discount. But here we are not going to avail any discount. The amount due was 1900, but we will pay them less than 1900, and we will pay less for amount of 300. So as 300 was the credit for return goods. So account payable was 19 minus 300, 1600, and paid them full amount. Paid full to holidays manufacturers Postage. Account payable was 1600 and cash was 1600. Right. So at this time, we are not going to avail any discount. So the say, inventory accounts will not be credited. So what about the next one? Granted Vega 200 credit for our suitcases return costing of 120. Again, we are given two types of information, so we have to record two entries. Vagabond to whom we have sold on 22, on 31 they are going to they are returning us some goods. So we are giving them discount, not discount, we are allowing them the credit for the return goods. As for 200, there was their cost was 120. So this 200 will be reduced from the sales revenue, and this 120 will be reduced from the cost of goods sold. So let's see how we will record that. Return of the goods that are returned by our customer. Our customer have returned us the goods. So our sales revenue has reduced. So sales returns will be recorded here. Returns and allowances. We call it sales return and allowances of an amount of 200, whereas this has uh, this reduced our account. This has reduced our account receivable. With the same amount of 200. And the second entry will be made to increase again our cost of goods sold, to restore back our cost of goods sold and inventory account. That was 120. To restore back our cost of goods sold, that these goods have been returned back. So we have to do the inverse entry as that of our sales entry. So just post it. Cost of goods sold 120. Sales return 200. Account receivable 200, and the last one is 120. 200 and 120. So that's all. We have done all the transactions on the journal, and then we have posted them to the T accounts. So we were asked only to do this. So with this problem is done. So we were only asked to generalize the transactions. So we have done this. So this problem is done here. Okay, thank you so much.